Hello and welcome back. If you are a trader, you have probably felt this. You draw a support or a resistance line and the price just ignores it, or it stops just before your line and moves away without you. You feel like the market is playing a trick on you. The truth is, your support and resistance levels are likely wrong. They are too simple. The big players in the market see those simple lines and they use them to trick you. But there is a better way to find the real zones where the big money moves, a way that is calm, clear and works. Today, I will show you how to use the wisdom of Larry Williams and the power of ICT Fair Value Gap, which is called the FVG, to find the levels that truly matters. Stay peaceful and let's learn. Hello, welcome back to Traders Mastering. First, I want to say sorry for being away for a few months. I have been very busy, mostly because of all the great feedback and questions you have sent me. Thank you. I am back now and I will be creating new videos every week. We focus on general trading strategies, especially for Forex on Wednesdays. And on Sundays, we will look at crypto strategies using the ideas of great traders like Larry Williams, ICT, Richard Wyckoff, and others. Today, we are solving the biggest problem for new traders, finding the right place to buy or sell. This strategy is not about guessing. It is about seeing the market clearly, like a map. It solves the problem of fake breakouts and missed entries by showing you the high quality zones. This is a place for a calm learning. No excitement, no hype, just clear understanding. Let's start with the simple idea behind this powerful method. Now, let's explain our strategy in details. This strategy has 6 simple steps. We are combining 2 powerful ideas, which is called the Larry Williams swings and the ICT Fair Value Gaps. First, we have to find the swings. Larry Williams taught us how to find the important turning point on a chart. We call these swings highs and swings lows. These swings are the real support and resistance. In a trend that is going up bullish, a broken swing high can become a new support, and in a trend that is going down bearish, a broken swing low can become a new resistance. Second, we know the big trend, which is called the 4-hour chart. We must always trade with the big trend. We go to the 4-hour chart. If the trend is up bullish, we only look for a buy setups. If the trend is going down bearish, we look for a sell setups. This is the most important rules. Step 3, we have to find the broken swing. For a buy, we look for a 4-hour swing high that the price has recently broken above. This broken swing high is our important support zone. For a sell, we look for a 4-hour swing low that price has recently broken below. This broken low is our potential resistance zones. Our next step, which is adding the FVG, which is the step 4, we look for a fair value gap that is very close to the broken 4-hour swings. For a buy, we want a bullish FVG near the broken swing high. For a sell, we want a bearish FVG near the broken swing low. For a sell, when looking for selling. So when a broken 4-hour swing and a FVG line up, this zone becomes very strong area. Step 5, we have to wait for the 15-minute chart. So we move to the 15-minute chart to enter the trade. We wait for the price to come into the 4-hour swing plus the FVG zone. Then we wait for a clear signal that the market is turning around. These signals is called market structure shift or a break of market structure, which is called the BOS, followed by a retest of the zone. Your stop loss must be placed safely beyond the zone. Aim for a risk reward ratio of 1:2 or 1:3. Now, let's quickly look at our 4-hour chart on the Euro USD. So we have discussed a lot on our previous slides and how you can be able to become profitable using the Larry Williams and ICT FVG fair value gap to become a profitable trader. So probably I'm not going to cherry pick this trading strategy, because this strategy is one of the most proven trading strategy and one of the most powerful trading strategy that you have ever come across in the trading industry. So let me quickly show you how you can be able to trade this strategy. So like I talk about, when looking for, first of all, you have to look for the trend. So you mark your trend as BU or TC, depends on the trend direction it was formed. So I can keep mine as a BE, which is the bearish break of market structure, which is called my BMS. So after we have marked these swings, remember this trend is bearish. So if the trend is bearish, look at the, remember this is our swing high. This is our swing high. This swing high got the swing high formed, and it take our swing low. So after we take this our swing low, what happened? It become a bearish market structure on the 4-hour chart. So the next thing we have to do is to quickly go to our chart. We quickly go to our chart and mark this the FVG connected to the break of market structure. So once you are done, you simply put FVG as a gap. So remember, this is a swing low. This swing low is not acting as a resistance for price to go further up. So it's acting as a resistance for we to look for a short selling. That is the reason most of the time price does not go to our swing high. Instead, the algorithm balance the price action between and resistance on the FVG. So you understand what I'm trying to say. So we go to our 15-minute chart. After we go to our 15-minute chart, look at what happened. You have to look for market structure shift, and after market structure shift, you look for a retest. So it's very simple, and look at what happened. So market structure shift at this point during the 15-minute during using the body closer candlestick on the, look at what I'm trying to say. Are you getting it? So price retraced a little bit to the swing high, but however, you can take at this point and set your target at this swing high on the 15-minute chart, and you just target 2 to 1 arrow. So look at what happened, and it's your take profit was 8 and stop loss above the 15-minute market structure shift when it's bearish. So that is how this strategy works. This strategy is one of the most profitable trading strategy, and you can also backtest this strategy on other assets as well. So let's go to another pair. So I'm not going to share pick this trading strategy, because this trading strategy is one of the most profitable trading strategy. So I'm not going to say this strategy is one of the best. This is a profitable trading strategy using the Larilians and the ICT FVG gap. So remember I told you that first of all, you have to mark your market structure shift. So this from henceforth we have the bearish market structure shift, which is the on the 4-hour chart. So after we have gotten the 4-hour chart bearish, what do? You mark it as a BMS, or this is going to be TC bearish, trend of market structure change, which is TC bearish, trend of bearish market structure. So however, you will see why I did not use this point. However, this was because the higher time frame was very bearish, and we have this 4-hour short-term swing here, so it's kind of it's very far from this point. So you can use this one. However, it could not take the liquidity of this these zones, so it's all good. So all you have to do is to look for FVG between the swing low of this
market structure shift on the 4 hour, and you quickly mark your FVG at this point, and this is going to be the FVG. And what really happened, this is FVG, so can use the FVG. This is the FVG. So this is the FVG. You go to the 15-minute market structure, and you have to be very careful. And look at what happened. We quickly have the 15-minute market structure shift at this point in time. However, look at what I'm saying. It shift at this point in time. Look at what I'm saying. It shift at this point. This was the 15-minute market structure shift. But however, you can decide to use these zones. Look at this one. It's also shift at this point. Depends on the zone you want to use. So, like me, I can go to this point in time and just mark it on the 15-minute trend change, which is trend bearish. So after the break of market structure, I wait for a retest, and look at what happened. I target at least two arrow. Look at what happened. You can even target 3 arrow, depends on how far it is. So do you see how powerful this trading strategy is, using the swing low acting as a resistance and the FVG combination? So this is the bearish market structure. So let's quickly look at other example. So I'm not going to cherry pick this trading strategy. So this is the USD card. Like I told you, you have to mark your market structure. Once the market structure is bullish, what do? You look for FVG overlapping with the swing eye at this point. So there was an FVG between this swing eye and the swing eye also. So this is a bullish BMS. This is BMS bullish. So this is our FVG. You can say FVG. It's our FVG. So what really happened? Price go to this FVG. We have to go to the 15-minute market structure. So it's very simple, and I don't have. So look at what happened. Market structure shift at this point in time. It was bullish. PMS bullish. So after that we look for the retest of it. Look at what happened. Target at least 2 to 1 arrow or 3 to 1 arrow. Look at what happened. Look at 2 arrow was eaten. You got hit by 2 arrow profit, and you can also target 3 arrow, depends on your choice. You see what I showed you now, because this strategy is one of the most powerful trading strategy, believe it or not. And so let's look at our conclusions.
Now let's talk about the most important point in this video. One thing you must know, that trading is not about excitement. It's about calm growth and patience. The market is a place of information, not emotion. By using the simple, clear rules of Lagrange swings and the precision of the ICT Fair Value Gap, you can stop trading based on simple lines that everyone sees. You can start trading with the confidence of knowing you are in the high quality zones. Remember this checklist before you place a trade. 1. You have to know that the 4-hour trend must be bullish or bearish. 2. You have to know that the 4-hour swing high or swing low broken and must be marked. And the FVG must align with the 4-hour broken swing. The 15-minute market structure must shift during these zones, and after shift you wait for a retest on the 15-minute market structure, and you start calculating your risk reward ratio and your position sizing after you have entered the zone. And lastly, do not rush the 4-hour trend confirmation. Do not rush the 15-minute signal. The best trades are the ones you wait for. If this video brought you clarity and a new understanding, please take a moment to help this channel grow. Like this video so more traders can find this calm, clear way of trading. Subscribe to Traders Mastery so do not miss my next strategy video. And please leave a comment below. Tell me what part of the strategy you find mostly helpful, or what topic or you would like me to cover in my next video. And please, the last point is that make sure you are trading the ICT key zones. So if you are not trading the ICT key zones, make sure you are trading it with the strategy. Thank you for watching. Trade peacefully, trade wisely, and I will see you in my next video. Happy trading. God bless.